It's Cover Your Assets, financial tactics for the 21st century. Here, experts at the table. We've got Todd Rooker, unbiased advice. We've got Craig Nestor, foreclosure defense. And of course, Jason Walgrave, investment property and short sale specialist. Guys, rousing end to the last segment talking about, hey, you know what? The real estate market absolutely can turn around. And when it does, it'll be pretty quick. And you've started to see some evidence, Jason.
You know, when you look at rent versus own, and that's something that we've taken a real close look at in the last couple of years, we're in the position now where you can, in most cases, it's cheaper to own than it is to rent. So I mean that's
rare too.
Once in a lifetime,
rare.
really.
It's a big indication to me that, you know what, if we're not at the bottom, we're very, very close. And based on that article that was in the National Association of Realtors website last week, it's suggesting that values are going to go up. You know, they say that opportunities are seldom labeled. And I think that what that means is, you know, people are kind of waiting and they're waiting and they're waiting for the opportunity. Well, like Todd said, the opportunity is probably going to come and go, and it's not going to, you know, prices I don't believe are ever going to shoot up like they did. And I think the values will go up at a slower, more controlled pace. But with rates as low as they are and prices as low as they are, and when you can own for less than what it costs to rent, why aren't you buying?
But look, you know, when you think about how the pricing will stabilize, it's a pretty simple concept to wrap your head around. If there is inventory levels like we've seen here in the last few years, where you've got 10 and 15 houses available for every qualified buyer, well, it doesn't take a lot of genius to recognize that the qualified buyer is writing the rules and they're in the strongest position. However, you turn that around and you put two buyers competing for one home, you instantly have competition within the market, and that pricing cannot help but be bid up. It is as simple as that. It's supply and demand. What's going to cause that? What's really going to cause that is the lenders have come to the conclusion that we need to start making money again doing loans, and as soon as they loosen up the underwriting guidelines that give the availability of competition to buy homes again, it's going to happen overnight. And the falling in, as I say, all of a sudden everybody's going to have this massive fear of loss, and bang, here we are again in an appreciating market. It will happen in that way.
Here's an interesting stat for you. Right now, inventory of homes for sale is down 24% since this time last year, and sales are up about 15%. So when you're talking about the pendulum swinging and supply and demand, you know, it's the supply is less.
When interest rates are 3.75%,
exactly,
and houses are 40% less than what it costs to build, there's only so much lower it can go.
Right.
And so no matter where you are you in a position to take advantage of this new now? And if you aren't, interact with us, regardless of where you are. If you're in a crisis, look, we'll get you through that. You'll come out the other side. Mm-hmm. You're not going to get out of it squeaky clean, but you're going to get out of it. If you're upside down and current on your payments and you're spending all your money and not getting anywhere, we have solutions for that too. We've got to get all of our clients, each of our clients individually, into a position where they can take advantage of real estate in 2012.
And let's look at what that actually means. When you talked about interest rates and the profound impact that credit has and the wonderful opportunities in financing today, if you just take a look at a $300,000 home and you say, all right, if it's a $300,000 home and I'm going to carry a mortgage of $300,000, that means that every percentage point, if it's 3.75% interest versus 4.75 versus 5.75, that's 2 full percentage points of interest. Well, each point's worth 1% of the outstanding mortgage, which is $300,000. So 2 points difference between 3.75 and 5.75 is $3,000, 1% of the $300,000 mortgage times 2 full points. That's $6,000. You divide that number by 12, that's a difference of $500 per month in an interest rate based on 2 points. Wow. And you know what? Interest rates could change tomorrow.
Oh, yeah. And, you know, for a while, well, lately, the last couple of months, everybody has been expecting, at least the lenders that I've talked to have been expecting them to hold static. But we all know that this cannot possibly go on forever, right, Jason?
Well, how much lower could it go?
Well, when you're talking about a $300,000 mortgage and your principal and interest payment on that is about $1,500 a month. Okay, so if you want to do quick calculations, it's about $50 for every $10,000 that you borrow. I mean, it's incredible.
And you do not rent a home that is today's market $300,000, because frankly, that's a $450,000, $500,000 home 5-6 years ago. You don't rent a $300,000 home in today's market for $1,500 a month. Are you kidding me?
Nope. It's incredible. I mean that's a $2,200 to $2,500 rental.
Yeah. What are you finding? I'm very curious, Jason. What are you finding that's getting people off the fence right now and starting to mobilize? Because you did note there in your stats a minute ago that sales are up this year over year right now.
Yeah, I think that the fear is dwindling. I think that we've heard so much bad media and so much bad news in the last 2, 3, 4 years about how terrible real estate is. But then when you sit down and you actually calculate the numbers, what does it mean? What is the real cost of home ownership? What does it mean to me? If you look at the real numbers, people realize that, it's the best decision. Now is the time to buy.
And it is all about raising your kids and living in a place and sharing memories with your family. So it isn't just about the investment, but that isn't to say that it isn't a wise decision anyway.
Absolutely.
Well, and speaking of just sales and a lot of them, what contributes a lot of the sales today, short sales, Jason. And I know you have, that's a very big part of your real estate practice. And you've got a killer track record with that. Talk about those just a bit.
Short sales they've come a long way in the last 5 years. It was, 5 years ago, the banks, they did not want to even talk about or consider a short sale. We've teamed up. We've put together this team to do the show, and we've teamed up with a law firm a couple years ago to systemize the process of doing a short sale. So I'll talk with people over the phone. We'll do a 20 to 30 minute phone conversation. I'll qualify them, determine if the short sale is the right option, or maybe they need to go talk to Todd, or maybe they need to go talk to Craig. Whatever the case is after that conversation, that's the direction that I'm going to send them. We then sit down and meet. We go through, and I explain what does it mean to do the short sale, what are the consequences, what to expect as far as timeline, and then it's about the marketing plan. It's about pricing it right so that we get an offer in the first 30 to 45 days. It's about having a team of lawyers in place to successfully negotiate the short sales. Right now, we're at a 92% success rate. The national average is right around 35 or 40%. So it's having a system that is successful. And having terms that are acceptable, rather, to the sellers. And what I'm talking about is not just releasing the second mortgage and having it close and everyone walk away, but getting satisfaction so that when it closes, it's done, and you don't have the second mortgage company knocking on your door within the next 6 years and then an additional 20 years to collect.
And that means ending up paying on something that you've sold.
That's exactly right.
That's not there. And so that has to be taken into consideration up front. So that gets determined in that early interview process. And, I think you do a lot of work up front too, to determine the potential short seller's eligibility, because you don't want to tell them that there's something possible and then have them find out at the last minute, oops, sorry.
Absolutely. I mean, that's a part of that initial interview. So we'll, that phone consultation, I'll find out, what has changed in your financial situation. Do you have more expenses? Do you have a decrease in income since you purchased the property? Has your family grown? Is there a divorce? Is there medical bills that have come up? So we're going to dissect, is there any type of hardship? And then we can talk about, is this a possibility or is it not?
Because you can't just say, I'm upside down in my home, so I'd like to short sell it.
You can say that, but it's not going to happen. The banks are very, and they're becoming, and Todd, you can attest, is they're very smart about digging deep and doing their investigation and making sure that, you did have a hardship, you don't have $500,000 in the savings account, and finding out that it is legitimate.
When I sit down with somebody, I have them fill out a 14-page discovery document. It is geared to draw out the very things that the bank would look at. Everything that you have that's licensed, registered, insured, the bank is going to check it out. And if you look good on paper financially, you're going to have a tough time negotiating. So those are the conversations you need to have in advance so you know where you're at. You don't want to find that out when you're supposed to be closing on Friday and today's Wednesday.
Yeah, and I think really what's very important to know about the Cover Your Assets team, really every day of the week, that you can reach them at 855-835-8500. That's 855-835-8500, is if your situation, if you even think it might be dicey or getting there at some point in the near future, call and have a conversation. They are open and they will talk with you and direct you to the best possible professional to help you. Also visit CYA21.com. That's CYA21.com for all of our seminar upcoming information. Have a great weekend.